if today you decided to throw in $10,000 into YBTC, what kind of forecasted numbers could you expect? So in today's video, I'm going to look at the numbers, the forecasts, and the income that you could make from YBTC. So this has been a requested video. I think YBTC is very popular in the crypto space, and it's a much loved Bitcoin ETF from all of the Bitcoin covered call investors out there. So first of all, let's look at the fund itself. What is YBTC? As you can see here, it's a Bitcoin covered call ETF from Roundhill, and this one has been performing pretty well since inception. So let's just look at the fund. So the overview, Roundhill Bitcoin covered call strategy ETF is the first listed US Bitcoin covered call ETF. The fund offers exposure to Bitcoin, suggest to a cap, obviously, because they're doing covered call strategies. So they're selling calls or they're selling puts. They're covering their holdings basically while providing potential for current income. YBTC is an actively managed ETF. So just to give a quick summary, YBTC is going to give you exposure to Bitcoin, but your upside is going to be capped because it is covered calls. So you're going to get income and you're going to get exposure to Bitcoin, and overall the total returns of YBTC should be as close as possible to the Bitcoin because obviously the underlying is 100% Bitcoin. Income potential, YBTC seeks to generate weekly income. So that's one thing that is cool about this one, is that they pay on a weekly basis. Exposure to Bitcoin, so YBTC seeks to offer exposure to Bitcoin ETPs and has direct exposure to Bitcoin subject to a weekly cap, and it's actively managed. This one, they generate weekly income through covered call strategy on Bitcoin futures and Bitcoin ETPs. There's some income Bitcoin ETFs out there that do only Bitcoin ETPs or only Bitcoin future ETFs, and this one can do both. So that is pretty cool. It's been launched in January of 2024, but for the sake of this video, I'm going to look at the numbers from January 2025, because when this one was launched, they were actually paying monthly distributions. And as of January 2025, Roundhill announced for multiple of their funds that they're switching to weekly, including YBTC. So now YBTC has been paying weekly distributions since January of 2025. So if we look at their holdings, we can kind of see what they're doing. So as we can see, they're buying calls on IBIT. So these are ETPs. So this is just a normal Bitcoin ETF. And they're also buying calls on CBTX, which is a Bitcoin futures. As you can see from their holdings here, they're basically giving you a synthetic exposure to the Bitcoin while generating income. 100% of their holdings are currently options, and they do have some obligations, which are basically cash. As we can see here, they're buying a call at 27.83 and they're selling a put at the same strike price of 27.83 here. This strategy is called a synthetic long. So what it is you buy a call and you sell a put at the same strike price with the same expiration date. This mimics the payoff of owning the underlying stock without actually owning it. You can basically get exposure to the movement of the Bitcoin, generate income without actually having to hold a bunch of shares. It's basically a cheaper way to get exposure to the underlying because you don't have to actually buy shares. Now, just to see what this actually means. So here, as we saw, they're buying a call at 27.83 here that I have the blue line on, and they're selling a put at the same strike price on CBTX, and this is CBTX right here. So the strike price is higher than the current price of CBTX, and it expires on Friday, September 19. So it expires in about 2-3 weeks. So if the price of CBTX, so if the price of Bitcoin doesn't go higher by Friday, September 19, so obviously this is a bullish strategy because the strike price is above the current price of Bitcoin, your call is going to be worthless. So you're going to lose money on the call that you bought, and your put gets assigned. So that means that you are forced to buy some shares at 27.83, even though the price of Bitcoin is currently at 26.74. So you're losing money on the difference because you have to buy higher than the price of the actual asset. And now if the price of Bitcoin is above the strike price, that's where you make money. So your calls gain value. So basically, if the price of the Bitcoin ends up going all the way here, for example, you're allowed to buy Bitcoin for the strike price, or you can just sell your calls for a profit. And the higher the price of Bitcoin is, the higher your calls are going to be worth. So first of all, you sell puts to get premium. And second of all, you can sell your calls for a profit since the price of Bitcoin is actually worth more than the strike price of those calls. If we quickly look at the total returns of YBTC versus the actual Bitcoin, so versus IBIT, which is iShares Bitcoin ETF, they are very, very close despite YBTC being an income ETF. And that is comparing them from January 2025 up until now, since that is all the data that we have since YBTC is weekly. And this is actually something that I think is very cool to see. Since YBTC switched to weekly, they have been able to perform very, very well. And I think this is probably why people love this ETF, is because yes, they pay income, but your upside is not as uncapped as the other more traditional covered call ETFs. First of all, they pay weekly distribution, so this allows the investors to compound their shares faster, and even though the upside might be capped a little bit, they're able to get paid more often and buy more shares more often. As we just saw earlier, I think that YBTC also had some changes in their strategies, and currently they're doing synthetic long. So they're not just selling traditional covered calls on the Bitcoin, where that's where you get your upsides cap, but now they're buying a call at a certain price and selling a put. What's good about that is that you probably lose a bit more money when Bitcoin is going down. When Bitcoin starts going on a rally with that synthetic exposure strategy that Roundhill is currently using, you have unlimited gains in the upside. So if Bitcoin decides to rally super high, that put that you are selling is going to give you premium, and that call that you bought, you would be able to sell it for a profit, and the more Bitcoin rallies, the more that call is worth. So doing that synthetic long strategy really allows them to not cap the upside as much as a traditional covered call ETF, like for example BTCI by Neos. So as we can see here, the total returns of YBTC is 19.26% compared to the actual Bitcoin, which is 17.75. So they're actually slightly outperforming the Bitcoin. Usually income ETFs give up upside for income, but here they're giving you income and they're also giving you total returns that are matching or even better than the Bitcoin. So honestly, very exciting to see this. So your $10,000 investment in January of 2025 would now be worth $11,900 versus $11,700 for investing in the Bitcoin only. 198 shares in January 2025, and now you would have 252 shares by reinvesting everything. So you're actually losing in terms of share price, but since you've been able to reinvest and compound your shares, you're still outperforming the Bitcoin because you're able to grab more shares at a discount and basically lower down your average cost on YBTC over time. We see that if we would have invested $10,000 in January 2nd of 2025, so that is when they switch to weekly, we could have bought 200 shares. So our starting shares would be 200 and our end shares would be 200 if drip is off. And now here I exported all of the distributions with all of the opening prices on the day of those distributions. So this allows us to get the yield and also get the amount that we would get paid on a weekly basis. The first weekly distribution on January 10th of 2025 would be a distribution of 53 cents per share. And since here we have 200 shares, we would got $100, and then there's all those distributions here. The end value of our investment would be the number of shares we have at the end multiplied by the price of the shares at the end plus the sum of all of our distributions, $11,000. That's a return of 18.6% and a cash return of about $1,800 on our initial $10,000 that we invested here. If we activate drip, as we can see, we go from 18.6 to 23%. So that is a 5% total return gain. So dripping your shares make a big difference. And then as we can see here, we start with 200 shares and we end up with 255 shares. And on a weekly basis, depending on the distribution and on the price of YBTC, it seems like we're able to buy between 2 to 1 to 3 shares per week. And here the last 3 weeks been compounding at 3 shares per week. Basically, if you would have invested $10,000 at the beginning of 2025, currently you would be up around 2.5K on your initial investment. So a return of almost 25% here, as you can see, 23%. And the average distribution you would have received on a weekly basis would be $85. The median would be 71, the average yield would be 42%, and the median yield would be 37%, and then the standard deviation on the median is 15.4%. So this is just to look at what could be expected. So the lower range you would have received would be a 22% yield on a weekly basis. And then on the upper end, you would receive a 53% yield annualized on your weekly distribution. What I did is I took the opening price of the latest distribution, which was on July 31st here, which is 48 and 51. And I added 5% here. So this gives us a share price of $50.94 and a median weekly distribution of 33 cents. I did something a bit more interesting, is a forecast of what your investment would have looked like over the time. So let's say you put an initial investment of $10,000 and then you do not contribute anything else, and all that you do is you let everything drip. Considering a share price of $50.94, so I made the share price a bit more expensive to make it harder to buy shares and make the forecast more conservative. And then I used the median weekly distributions of all of the distributions since YBTC has been weekly. And this is not without taking into consideration the potential growth of YBTC's share price since the Bitcoin is expected to be quote unquote bullish in the long run. So let's just assume the share price stays like this and the weekly distribution stays at 33 cents per week, and that's something you can play around. You can put 50 cents. It would make the numbers different, but let's just use 33 cents. Here, as you can see, you would start with 196 shares, and after 12 months, you would be at 259 shares. You would be making $85 a week, $370 a month in average, and you would be able to drip around 7 shares per month. Now, if we look at 24 months, in 24 months, you would be making $100 a week, and you would be making $500 a month. And then in 3 years, so 36 months, you would be making $160 a week, or almost $700 a month, and you would be able to drip 13 shares per month. Let's say you invest $10,000, and then on top of that, every month you buy $1,500 worth of YBTC shares. So on the first month here, you put $10,000 down and you do not buy anything. And then this 29 here is every month that $1,500 would allow you to buy 29 shares of YBTC. This is why the number is flat. And then here is the shares that you would be able to drip. After 12 months, you would have 588 shares. You would make almost $200 a week, and you would make $840 a month. And then after 24 months of this, you would be making $400 a week and $1,700 a month. For some people, that would be able to cover, for example, the price of their rent. From here, if you stop adding your own money, just letting $1,700 a month drip is still very good compounding on YBTC. And now if we end at 36 months, as you can see, the power of compounding is even faster. You have 2,100 shares. We make almost $700 a week and $3,000 a month. For some people, $3,000 a month could maybe allow them to pay for all of their life expenses and then use the rest of their quote-unquote 9 to 5 income to fully invest in their portfolio. So that could maybe allow you to contribute even more in your portfolio and allow the compounding to go even faster. Now let's look if you put $10,000 and then you're able to invest, for example, $3,000 a month. After 12 months here, you make $300 a week and you're already at 1.3K a month. And then at 24 months, you're making $700 a week and you make 3K a month already. And then after 3 years, you make 1.2K a week and you're making 5.3K a month. For some people, that is already covering more than 100% of their take-home paychecks. That just shows the power of compounding and how sticking to a plan which you're investing can really help accelerate the growth and the compounding in your portfolio. Let me know in the comments what you guys think about YBTC. This specific ETF has been requested a lot in the comments. I know a lot of you guys subscribed to my channel already own this ETF. So let me know in the comments what you guys think. Would you personally throw $10,000 into YBTC? And before making this video, I'm not gonna lie, I thought maybe BTCI was the best option, but since YBTC has been weekly, they've been literally side to side with the performance of Bitcoin itself without capping the upside. So personally, I'm pretty optimistic with the future of this one. I think this one has potential to perform very, very well. As an income investor, allow you to harvest some premium and get some income in your portfolio without necessarily sacrificing some upside, especially with the Bitcoin, where with the Bitcoin, a lot of people expect a lot of upside, so maybe they're a bit more reluctant into investing into income ETFs with the Bitcoin. But I think with this one, it could be a very great option for people who want some extra income in their portfolio, but they don't want to sacrifice the potential very good upside that the Bitcoin could offer in the future, the near future, depending on your bias and if you think that Bitcoin is still going to go up. So yeah, my personal opinion, I think that this ETF is pretty good, especially with their synthetic exposure and their weekly distribution. It has a lot of potential, and since the beginning of 2025, it has been doing very, very good, and see how YBTC can perform throughout the rest of the year and see how it's going to react to the future price movements of Bitcoin. Until next time, take care, guys.